Per usual, everything else channels for educational purposes only and is not intended as financial advice. Congratulations to the Philadelphia Eagles for winning the Super Bowl. They made it too big to rig. You may hear some excessive celebration in this video. And as far as markets are concerned, DJT has the tariff hammer out on a Sunday night. On a flight, I think, to New Orleans, he was talking about more tariffs. We ended the week talking about tariffs. There's going to be reciprocal tariffs, retaliatory tariffs, global trade war. Maybe they go, maybe they won't. But that's not an environment for confidence, for certainty. Markets like certainty. Markets like confidence. So it makes sense that what we're seeing here, at least in crypto especially, is not particularly bullish. A legacy is only 2-3% from all-time highs on the S&P side of things. But the bigger problem here is the dollar. The more these tariffs get implemented, the stronger the dollar gets, and the more bearish crypto becomes. We've got a few things potentially tailwind-wise. We've got the reverse repo draining to zero. Soonish, when that happens, there's probably going to be a liquidity event or liquidity problem that may or may not bring the Fed to act. A positive liquidity event should be bullish for crypto. We also have potentially the Treasury General account being drawn down to the tune of $800 billion. That is also a positive liquidity event. We did have Trump also mentioning that he wants to stop minting the penny, which we are far overdue for that. But on the dollar side, the DXY strength has slowed a bit. What's funny here is I don't think I'd want to be long DXY here, and I don't think I want to be long BTC here. So there's just neutral signs of indecision. This could break up, sure. If it breaks up, BTC should be headed lower with a high degree of certainty. Alts double that lower with a high degree of certainty. If this breaks down, if this acts like a head and shoulders, breaks below 106, then we should be well on our way to 120 on the BTC side of things. It really is still if this then that. But with the tariff loose cannon out there, it's just wait and see mode for many people who feel safer in cash rather than making a big bet. Now here's S&P futures. Okay, I mean, this chart looks great still. I mean, it hasn't started breaking down yet, whereas BTC has. You could probably argue an inverted head and shoulders up here. I think what makes most sense is to wait for the high. I think that's what most people are waiting for here. Wait for the break of all-time highs. Wait for maybe a push closer to all-time highs, 6,100. Cloud gives you its blessing. Certainly, it's above the cloud. I mean, we'll look at some alts in a second. They are not this. they are in Disasterville, Goblin Town, for sure. Starting with some fundamental stuff for BTC. I mean, we can draw down on the BTC side significantly, and we have in bull trends before to the tune of 30%. So you do have to be careful of that here. Now, it's hard to be turbo bearish BTC if legacy breaks all-time highs. We usually don't go in the opposite direction, but it's certainly something to be mindful for as a possibility. I wouldn't want to be 10x long here, for instance. I just wouldn't. You know, it might be correct, air quotes, at the end of the day to be long here, but my confidence personally in that is 0%, just because we don't know what's coming Monday or the rest of this week from Trump and how the markets will react to that. So to me, it's just not worth it. It's worth preserving some capital and sitting on the sidelines for a little bit. And I'd argue the slower this goes, the better. The more we can get a handle on any moves beyond what's happening now, the better. Breakout moves, trend reset, anything. Because right now it just feels like mega chop. Here's performance in cycle low. I'll put all these links in the description of the video. You can see we're in the black there, pretty close mirroring the 2017 cycle. We're hugging that pretty consistently. And I can tell you, as somebody who lived through 2017, that wasn't exactly fun either. It got fun at the end, and that's what everybody remembers. That's what actually onboarded many people who are listening to the video now. They onboarded near the top in 2017 or in 2018. A lot of people remember that. Fewer people certainly remember post-halving 2017, multiple negative headlines 2017. And oh, by the way, we had global trade war stuff kicking off in 2017 as well. So as far as the cycle is concerned, I'm not worried at all. And performance since halving, you could point to it and say, you know what, we're underperforming all the halvings. This is diminishing returns. It's over. This is bearish. I mean, that's a view you can take. You can say it's different this time. You can say those things. and be correct potentially. I just don't think that's going to be correct at the end of the day. What makes more sense to me here is just sort of a pause and refresh, maybe to the low 80s, and then go again in Q2. Looking at the 2-year moving average multiplier, also no signs of topping or warning signs here at all. Top on this is 260. If we zoom out on this and we look at historically, the warning zone is anything above the 2-year moving average multiplier, and we are basically in the middle. So this is either wrong as far as being the cycle high, or it says we have some gas left in the tank here. It's just going to take a minute. And like 2017, this took a significant amount of time just to get to the top of the multiplier. And then we had an additional move after that. MVRV, market cap relative to realized value. This is basically measuring unrealized profits. The higher the market cap goes relative to coins moving on chain, the higher MVRV goes. Eventually it reaches a point where more people than not say, okay, I need to take some profits here. It gets to wife changing money type situation, and people start taking profits collectively in aggregate. And that's what causes a top. So the difference in the 2017 cycle versus 2020 is 2020 happened very, very quickly. 2017, we sort of edged it a little bit, right? We got there, pulled back, and then finally had the blow off crescendo top in late December 2017. So we are nowhere near any of that. So either this is different this time, which I don't think is the case, or we've got time left in us this cycle. And this is the MVRV for the ETFs, which is the highest it's been. At least it was the highest it's been. This is important on the legacy side, just to see what the unrealized profits are in the ETFs. We don't really have enough data to have a signal here, but you can sort of see when things have gotten overbought relative to the cost basis. So that's also going to slow us down. It's likely not going to top us, but it's certainly going to slow us down as people take profit, especially if price starts to curl lower. I mean, if you're up 2x on this, you're going to start taking profit, certainly. If it's a large position for you, if you're a newer Bitcoin investor, as much as we want everybody to buy and hold forever, to the legacy mind, this is up a lot in a short amount of time still. ETFs on the week were okay. They weren't negative. They weren't wildly positive. Again, not a lot of certainty here on direction based on the weekly ETF flows for BTC. ETH ETF flows have been pretty awful. Friday, I think the flows were 0. So not really seeing a lot out of those. We saw one day from BlackRock that was plus 250 million, but other than that, not really much going on there. This is the 20-week moving average since inception for BTC. And one thing you'll notice is just distance from the 20-week. Typically, we hit this overbought area at around 1.5x from the 20-week. So much like cost basis and MVRV, all this stuff is really measuring a type of unrealized profit. It's saying if you go too much too fast, more people than not tend to take profit. As we break into the 20-week, then we have a better chance of continuing the rally, which I'll show in a second. Before I go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Parrot Ventures Inc., PVI, DBA, Kraken. And on the Bitcoin cloud, on the daily, fundamentally, this is not where you want to be if you're bullish. We've survived twice here with a wick. Now, this isn't exactly a resounding bearish argument based on price action, but doesn't look good for the bulls. We'll put it like that. You've got a bearish TK cross price in the cloud for the first time since October, since September. Momentum basically flat. Now, this can recover here. This can bounce here. This can go again. It's just, what is your confidence level on that? And what do you want to bet on that? Do you want to bet anything on that? I do not. That's me. This is not a spot based on this system where you want to make bets. Looking at what this may morph into if we bounce here would be a massive, super angry, elongated ascending triangle into Q2, which is totally fine. Nothing wrong with that. I would certainly have higher confidence on the breakout if it took its time relative to here. even though this is a potential support, you don't know that. This could be wrong, right? What makes more sense here based on the cloud is the bearish edge-to-edge argument, which is a move from one edge of the cloud to the other edge of the cloud. This happens infrequently, about once every other quarter, if it happens at all. And we've seen this frequently in bull runs. It's not the end of the world. The other end of the cloud would be at around 84K. You've got the 20-week moving average at 87. You've got the yearly pivot at 80, and you've got the 200-day also at about 80 by the time we get there. So I think collectively, the zone that makes the most sense on the downside for support, for bids, what have you, as a trading plan would be this. Otherwise, I'm certainly wholly unconvinced that we do anything here on the bullish side until we're back above the Kijun 99, 100, something like that. Even if we go in low time frames, there's really not much to speak of here. We are trying to build out an Adam and Eve, and that's maybe one thing to watch if you are trading this on lower time frames. Here's your Adam V, here's your potential U. Certainly possible. That's a tradable idea. Take the measured move here, approximately 106. You could sort of cheat the long a little bit at 99, 100. But based on the headline risk, based on the randomness that's been going on, for me, I don't know if it's worth it. We'll see. But other than that, really not much to speak of on low time frames for BTC. So if BTC looks like this, alts generally aren't going to be super happy. And we can go down the list of the main alts here, but based on the cloud or any trend metric you care about, this probably isn't a great spot to buy anything here. Sol at the cloud at the 20-week moving average, really not a strong signal of anything. ETH at the 200-week again, way below the cloud. You could say all this stuff's overbought, it's got to bounce. You could say that, you could take that trade, but I just wouldn't be super confident on that. SUI also below the cloud, below the 20-week. The good news is all this stuff on the alt land looks so terrible that if and when these clouds do reset, prices do pull back up above cloud, then this is where I like to be personally. Let this die, let it bounce, let it range. Don't care. What matters more to me is a complete trend reset, which is what's happening here with most of these alts. By the way, BTC also has evidence for a just vanilla double top, which also measures 80 to 85. So there's plenty of confluence and evidence for BTC going lower. And it's not just BTC. If we look at Tesla, Tesla's the same. I mean, it had a breakout in September. We had talked about that level at 270. Post-election, it took off, and now it's back in the cloud, right? It broke down over the past week, and over the past week, you got the sell signal on the cloud. And this is a great trade from 210 to 390, right? Even if you missed the top, even if you missed the inverted head and shoulders, just taking the cloud signals, not even taking the measured move into account, this is a great trade. So much like crypto, I say all the time, what more do people want? Trees don't grow to the sky. People take profit on these fast moves, and the late longers tend to get buried. So in legacy land, I'm really not seeing much of anything. And I actually went through, I did this through TradingView, but you can pull up a screener of the cloud and look at the cloud versus price, cloud versus Kijun. And for some of these charts, this is where you want to live most of the time, is like price in and around cloud closely, percentage-wise. It may be priced in and around Kijun. So I looked at a couple of these. I mean, Motorola, of all things, maybe one of the best looking charts right now. And another thing these screeners are good for, if you look at the overbought stuff, especially Cloudflare, Reddit, Palantir, Hood, Spotify. This is not where I take a fresh position when we are 70% above the cloud, 40% above the Kijun, something like that. This is danger zone territory. That stuff can continue, but again, not a fresh position. Now we can go to the other end of the spectrum and we can look at things that look awful. Are they bad enough to buy? And I kind of bounced around some of these, and I like most of the alts, they're still waiting to bottom in my eyes. So I think we need some time there broadly in legacy land as well. A few of the charts that did look interesting, again, Motorola, potential inverted head and shoulders up here. Huge trend throughout 2024 that I heard nobody talk about. Also potentially canceling this head and shoulders potential bullish TK recross, price above cloud. This is the type of thing you want to look for on alts after they've recovered, even on BTC, right? In the cloud, you are neutral, highly volatile, anything's possible. What the cloud helps you with dynamic support and resistance is to figure out, okay, when is long enough? When are we back to being bullish, for bullish continuation in this case, or a bearish reversal? So this looks more to me like a bullish continuation chart than a bearish reversal. Lily's another one, LLY. Similar idea, similar setup, potential double bottom here, bullish TK recross, upcoming price above the cloud, bullish cloud. It's had a massive, mega, multi-year run, so you got to be careful of that. But at the very least, it looks as though the pullback is potentially over and it's potentially ready for a move higher. On the other end of the spectrum, something that's pulled back a lot, it looks, again, potentially ready to make a move higher. You could call this an Adam and Eve, maybe an eventual inverted head and shoulders out of this. The cloud likes it with the bullish TK cross coming up. This is Coca-Cola, KO. Potential bullish edge to edge here. And it's not much. It's not super impressive, but it's something, right? It's something at a time when there's not much else going on. Disney's another one. Pull up the Disney Tesla pair trade. How funny would it be if Disney starts to take off closer to 150 from this level? Maybe it continues bouncing around again, but this to me looks like a chart that's been punished enough that has printed a bottomy fractal that looks ready to go. And if we look at all of China, this is China Tech, CQQQ, maybe it's been punished enough. I don't know if it's for me. It's not for a lot of people. But again, it's something to do when there isn't much else to do right now. You can look at FXI. China large cap ETF looks very similar. It's got this scoopy bottom, maybe Wyckoff, maybe inverted head and shoulders. You know, it's kind of a Rorschach test. You got a lot of things in here happening. Nothing that to me looks bearish at all. And maybe most importantly, unlike the US markets, this has been just punished for years. Now, of course, you've got headline risk, you've got tariff risk, you've got geopolitical Taiwan risk. You got all sorts of stuff going on with this. But from a chart perspective, it's an option. KWEB, similar. Chinese Internet ETF, just flatlining for years. And maybe the strongest example of that many people like is BABA. Same story, same idea. So there's stuff to do-ish out there. For most people, they're not going to like the options because I think most people like trading altcoins. They like alt season. They like the easy layup stuff. The problem is there's just too many alts. Nobody knows where to be, just be honest, right? And it doesn't help that BTC is neutral, maybe rolling over here, dependent on a few things this week. That's all I got for this one. Not great directionality here with BTC at the moment. Give me a like, dislike, comment, share, subscribe. Go Birds, and happy trading.